My role at Perpetual is to help us achieve our environmental, social and governance objectives. For the Ethical SRI Fund, that involves running the screens for those funds. The Ethical SRI Fund has two filters. The first step really looks at what a company does. So in that step we eliminate companies based on whether they conduct an ethically unacceptable activity such as alcohol, tobacco or gambling. Stage 2 of that process, our socially responsible investing screen, that screens companies out where they don't meet our minimum standards on a range of environmental, social and governance criteria. So that is really about how a company conducts its business. The screening process is not just about identifying companies that are doing something unethical or socially irresponsible. It has a positive scoring element. So in the socially responsible investing screen, we can reward companies who are doing the right thing. So for example, if they're using renewable energy or showing a particularly strong commitment to their employees or to the community and charity work, or even issues around diversity or employee training and development. Some investors believe there's a cost to investing ethically, that ethical and responsible investment funds are going to underperform their mainstream peers. But in our experience, the exact opposite is true. Ethical or responsible investment funds have actually outperformed their mainstream peers. In fact, our ethical SRI fund, our share fund, has been one of the best performing share funds across all categories over 3 years. To us, these results make perfect sense because if you identify a company that's producing an unethical product or service or doing something socially irresponsible, it's exactly those companies that are going to be higher risk over the long term. So if you eliminate those companies up front, you're actually giving your portfolio a much greater chance of outperforming over the long term. So you don't need to sacrifice investment returns to invest ethically. What's really encouraging is we're seeing more interest from our investors about how their money is managed and the types of companies that they're happy to be invested in. What we're seeing is more interest in issues like climate change. Last year was the hottest year on record. We're seeing more interest in issues around the supply chain of companies, how product is sourced and so forth. Issues around how companies deal with their employees through training and development, through diversity and so on. So the interest in these issues is only going to grow over time. So we think demand for responsible investment and ethical funds is going to grow.